Okay, what is going on, MegaWhale team? Welcome back to the channel. Thanks for tuning into another video. Today's video is going to be an update for Bitcoin. Now, if you have not watched our previous video, which is this one here, I highly recommend you go ahead and watch it. It's going to cover everything from price action to price targets to global economic environment, to talking about the financial situation, all of this kind of stuff, and we're going to be applying it to Bitcoin. So if you haven't watched it, go ahead and watch it. It's a video that we predicted this drop in, and you can find out how we did it. So coming back to the main chart here today, we're going to be taking a look at the daily as well as multiple other time frames and using some analysis tools and looking at the macro structures of the chart to determine if the price is going to go any lower than here or if it will bounce from here. Like always, if you have any questions or you have any comments, leave them down in the comments below. Remember to follow us on Twitter and Telegram. The links are in the description for that, and let's get stuck into the video. So as we can see, Bitcoin has come down to the bottom of this channel, and we talked about in that previous video that descending channels or ascending channels are very, very similar in the sense that they were just invertible. So what we can see here is the price coming in from the top side, bouncing, getting that final bounce, blow off top, and then obviously coming back down. Usually the distance between the apex and the low, it was the same distance between the initial low within the channel and the apex of the flagpole. So what we can do is we can take a measured move from the peak, from that apex, applying that measured move to this point here to give our price target, and it was around $12,000. So the measured move from this macro structure is 12,000 US dollars. Of course, we talked about this in the last video, and we also explained why our price target, or our initial price target at least, is sitting between $22,000 to $26,000, and we talked you through how we exactly calculated that, what we did to come up with that number, and what data we can use to support that number, and we did all of that in the previous video. So we're not going to do it again today, but we're going to be talking a little bit more about the short term. So first and foremost, guys, if you're looking at this chart and you're thinking, wow, this is still bullish, I think we're going to go up, I think this is good, what we can do is we can just flip the scale here, and you can see this instantly eliminates any emotional bias you have to price direction based on the visual aesthetics or what the price looks like. A lot of people look at the chart and they say it looks like it's going to go up, therefore I think it's going to go up, therefore it's going to go up. But if you look at the chart inverted, it sometimes eliminates that bias, it removes that mentality, and it forces you to look at the data to base your decisions rather than what the chart looks like. All right, and it's a common mistake for a lot of people in trading is they base their decisions on what it looks like, not what it's saying. So instantly, if we flip the chart, we can see we are in a bull flag formation. We know bull flag formations generally break upwards, and if this obviously breaks upwards, the price will be heading downward. All right, it's an inverted scale. So obviously on here we had that retest of the 200-day moving average. We closed above these supports, we're pushing into this resistance zone, and if we close above the resistance zone, which is 39,100, the price is most likely going to break out of this wedge, out of this channel, and continue upwards within our 26,000 to 22,000 range. All right, guys, so really simple what's happening here, and obviously if we invert that real quickly, we can see what it looks like on the downside, exactly like this. If the price loses this gray support box, all right, we can see we've got this gray support zone over here. Let me just get rid of this, sorry. This gray support zone here, which is kind of our final leg to stand on. Now this gray support zone kind of lines up with this bottom ascending dotted line, which is kind of a weak resistance, weak support. We've acted as support a few times here. We also had these large wicks kind of grab liquidity down below. So we are expecting to see this dotted line act as a little bit of support for a small amount of time. I wouldn't be surprised if we can hold on to this level for a day, maybe 2 days, maybe 3 days before it drops. But we'll see what happens, guys. Of course, let's go down to the smaller time frame. We kind of have a better look at what is going on here. So what we can see on the smaller time frame, obviously we see just in this last 4-hour candle, just 2.5 hours ago, we actually came down and touched this bottom of this support zone. We are looking at this range here. So the range between 41,300 and 42,100 is what we need to break above. This is going to be our new resistance range. If the price is able to bounce around here and get above this level, there's a pretty high chance that it could push up to 44,400, and then everything from yesterday's video will begin to apply. Remember, yesterday's video was based on the assumption that 44,400 breaks. It was just an assumption video. It wasn't our predictions. Made it very clear that we are bearish, and all our previous videos are talking about the downside. Yesterday's video was an assumption video to give you guys a scenario that could play out if the price flips. So if the price flips from here above 44,000, everything from yesterday's video will be valid, and everything from yesterday's video is something we would then need to keep an eye on. Until then, we are just looking at the downside from here. And of course, if we lose this dotted line, guys, so we lose this dotted line, our next price target is this line here. All right, and that is going to be a pretty significant drop once again, another 6% drop. So similar to the drop we just saw in the last day. All right, and obviously I do not believe we will hold this level if we lose this level here again. All right, so previous to the last two times, we managed to hold that support zone. I believe if we come down and lose this level, we're almost guaranteed to retest this level, but I do not believe we will hold it. I think we'll fall right through it. I think we'll come up and retest, and that will lead us into a more aggressive down swing. And we look at a lot of altcoins have lost their weekly support levels. We look at a lot of altcoins, we can see that across the board, which is very, very bad. Usually altcoins kind of signify or tell the future almost with what happens to Bitcoin, which they move in more drastic and aggressive measures. So let's just quickly take a look at the total cryptocurrency market cap. It'll be interesting to see. I haven't actually looked at a total cryptocurrency market cap, but it'll be interesting to see, and it did. There we go. All right, so the total cryptocurrency market cap has actually broken below that 1.925 trillion support zone, and we can see we called it up over here. We said we're going to crash down to 1.295 trillion at 1.2925 or 1.925 trillion. Sorry, we found a little bit of support. As you can see, this range was a little bit of support, and since then we have actually lost that level. So on that larger time frame, we have lost this ascending support line. Now this is pretty bad for obviously for the total cryptocurrency market cap, and we do have some kind of ascending wedge formation. If we took a measured move on that ascending wedge, what we can do is we can take a distance between the first initial apex and the first initial retest and apply it to the distance between the breakout point and downwards. And what that can tell us is we can see a move back down to 1.6 trillion within this move. Now, of course, if that happens, Bitcoin will drop massively, altcoins will continue to heavily bleed, and we'll see a huge retracement market wide. So guys, now is not the time to be bullish. Now is not the time to be buying long-term positions. Although the price is cheap, I don't think now is a time to be scooping up long-term bags. I've said this many, many times before. Just because the price is cheap, it doesn't justify you investing for the long term. The price is only cheap relative to the price 2 weeks ago, or the price is only cheap relative to the price 2 months ago, but it doesn't mean the price is cheap. We don't know the true value of a lot of coins in cryptocurrency. A lot of the market is very speculative. Therefore, we need to be very cautious when buying because the price is cheap. If we take a look at the RSI, for example, on the 4 hour, the RSI is signifying we are very, very oversold. But if we go to a 2-day, it is only midway. It's only at 43. So it's telling us we got a lot of room to continue downwards. Now, this is what I mean. Just buying because the price is cheap ignores a lot of data on the charts. And if we ignore data, we end up getting wrecked because we already know that the data is going to kind of tell us where the price will be heading. We talked about this structure in that previous video, so a few days ago, that is ascending channel, or sorry, ascending wedge formation on the Bitcoin chart was going to kind of give us warning signs of a massive crash before it happened. And if we just draw a little vertical line from the point of the breakout, which was the 5th of April 2022, which was a few days ago, we can see that from that point of that breakout, we actually dropped about 12.5%. So we can actually see that using the RSI and using macro structures on the RSI can actually determine points of breakouts on the chart before they occur. So guys, I hope you enjoyed the video today. If you have any questions, leave them down below. Remember to like, follow, comment, and subscribe. I'll catch you in the next one.